everyone, and welcome to this Fintech FP50 webinar all about embedded finance. My name is Polly Jean Harrison. I'm the features editor over at the Fintech Times, and I'm thrilled to be here today presenting this webinar to you. So, embedded finance has been a consistent trend within the fintech scene for the past few years, with the potential impact on the industry being huge. So, today in this webinar, we're going to take a look at the current embedded finance landscape and some of the opportunities they can bring with the help of my fantastic panel. And speaking of my fantastic panel, I am thrilled to be welcoming here today Daniel Greeler, CCO at Weaver, Jonathan Bell, CFO at FP50 Financial, David Beer, Global Head of Enterprise Solutions and Partnerships at Kogo. Thank you all so much for joining me, everyone.
Thank you for inviting us.
Yeah.
Amazing. Well, I'm so glad to have you here, and I'm so excited to see the conversation that we're going to have. But before we get into all that, I'd love to give you all the opportunity just to introduce yourself and your company and the kind of things that you do. And David, we'll start with you.
Excellent. Thank you, Polly. So Kogo is a carbon management and insights solution. So we help individuals and businesses decarbonize their lives or their organization. We work with 20 banks around the world currently at the moment. NatWest is our biggest client in the UK. Where we're starting to see a trend, and we'll pick this up through the conversation, is how do you start not only help someone decarbonize their life, but finance that transition to decarbonisation and build embedded finance products within that journey.
Amazing. Thank you so much, David. And John, how about yourself?
Hi, thanks, Polly. My name is John Bell. I'm the Group CFO at FP50 Financial. So we're a payment service provider. We provide acquiring and gateway services to customers across the UK, Europe, and the US. And, I'm sort of excited to be here and to be part of the discussion today.
Amazing. Thank you so much, John. And last but certainly not least, Daniel, how about yourself?
Thanks, Polly. And welcome to David and John. Looking forward to today's conversation. Daniel Greeler, Chief Commercial Officer here at Weaver. Weaver is one of the leading embedded finance providers. We work with companies across the UK and Europe. We specialise in helping B2B SaaS businesses provide financial services to their customers inside of the digital offering that they have, thereby creating a better end user experience, a better product overall, slicker, more powerful, very much in tune with the way that people expect to consume financial services in this day and age. Where we set ourselves apart from a lot of the other providers is that we provide a complete solution that can be folded inside of someone else's solution. And when I say a complete solution, we manage onboarding, we manage compliance, we manage issuing, data security, all of those pieces. So we really enable our customers, the B2B software providers who we work with, to focus on what they want to do, which is create a fantastic end solution for their customers.
Amazing. Thank you so much. So thank you all again for joining me today. I'm really excited about the conversation we're going to have because it feels like embedded finance is, quite a big thing at the moment, and certainly hearing a lot about it in passing, both at like conferences and when speaking to people like yourselves. So I feel like there's a lot to talk about here. So why don't we kick it off with something, super high level, super broad, so that you guys can really get into the nitty gritty. And what does the current embedded finance landscape look like to you? What is it that we're seeing right now? And John, I'll go to you for that one first.
Yeah, sure. Thank you. And I guess just as my sort of high level take on what does embedded finance actually mean. So essentially it's embedding a financial services product into a sort of non-financial service, platform, customer experience, app. I don't think it's not a new concept. So, I think, people are probably very familiar with, in the past sort of where going and say to a car dealership and buying a car, and then the car dealer will sort of have finance options. But I think what has changed in the last few years, and some of this is driven, I think, by more, uptake in terms of e-commerce. So, lots more customers are buying things online. The embedded finance is now, I think, has very much sort of moved into how those financial services get embedded into that sort of e-com and digitalized payments journey. I think we've probably all used apps or bought things online where essentially we can you can literally pay for whatever it is you're buying without leaving the app that you're on. So I think in terms of developments, I think things have moved forward very quickly in the last few years, but I think there is also a huge amount of further opportunity to develop, this in terms of how customers engage with their how merchants and businesses engage with their customers, but also then how they can use embedded finance to really drive further revenue and also additional loyalty and stickiness with their end customers.
That's really interesting. Thank you, John. And Daniel, how about you? What do you think to the current landscape and embedded finance as a whole?
Thanks, Polly. So first of all, I think I agree with John as a start for 10 in terms of the speed at which it's happening. I would classify it at a high level as the landscape's exciting, if a little bit fraught right now. And when I say fraught, it's exciting because the opportunity is huge. Fundamentally, it boils down to every way in which we consume our lives is becoming digital. You expect to be able to consume financial services inside of those digital applications that John mentions. And as a provider, we're already working with businesses who are doing hundreds of millions of spend through that. We're working with customers to go live in the next couple of months that will take that to billions. That's without starting to talk about the prospects I'm talking to for the future. So the opportunity is huge. It's the way in which we expect to work today. Pause. Why is it fraught? It's fraught because, understandably, the regulators are starting to pay more and more attention to this space. There have been, I won't say bad actors, but bad practices potentially in this world, and therefore you've had people who have been disadvantaged. You've had situations where potentially the end customer hasn't had all the protections that they would expect. So the regulator is rightly, in my opinion, paying more attention, ensuring that people are doing what they should be doing, doing what they say that they will, right? And to ensure that all parties are safe. But that almost takes me full circle, because the companies that are able to operate as required by the new regulators, the bar's raised, right? The experience is even better. The product that comes out is safe, it's embedded, it's frictionless. So, exciting, fraught, but what's coming out at the end of it is even more exciting, because the requirement to raise the bar to get up to the level the regulator is asking is meaning that the next generation, and obviously I'd put Weaver in that bracket, but the next generation of providers in this space are really doing something pretty special. So exciting and fraught is my, and coming full circle to exciting again, is my description of the landscape.
I like that. That's a really good description. That's fantastic. And then David, how about you?
Excellent, thank you. So I would agree with everything that Daniel and John has actually said in regards to the space. Where I'll add a slightly different context actually to it is you're starting to see a rise of conscious consumers, and conscious consumers want to know the ethical nature of what they're actually purchasing. So how do you embed that into that experience? We're seeing a lot around payments and lending in the actual space. So how do you look at ethical payments, ethical lending as far as that journey? So where we're starting to see a trend is that people want to launch products at point of need, but how do they do that? How do they do that in a way that they can actually finance that transition, or actually support people to make more ethical choices in regards to their spending, or in regards to their purchasing, in regards to their purchasing decision. So we're starting to see a real trend now around green embedded finance. What does that look like? Decarbonisation, transition products that we can go into a little bit more detail as we go through the webinar.
Excellent, thank you so much. And I guess you all spoke briefly on the opportunities that embedded finance has to both, sort of revolutionise the finance world, the fintech world, and just the wider world in general, and how we kind of operate within finance. I'd love to know what opportunities you guys particularly have seen with embedded finance, and what are some examples of embedded finance in action that really could help push forward the financial world. Daniel, I'll go to you for that one first.
Thanks, Polly. I'm actually going to pick up the baton that John mentioned earlier about buying a car, right? That's embedded finance from 30, 40 years ago. It's financial services inside of a non-financial journey. You go out to buy a car, David used the phrase finance at the point of need, right? You take the loan in the car showroom. Well, you can now do that digitally, right? So that's a perfect example. Weaver is actually working with companies that do exactly that, car finance, but in a digital setting. Think about the way that people look for cars in this day and age. People don't go around 10, 15, 20 storerooms, right? Car showrooms, and they go online. They go to a search engine. They try and find what's available in their local area. All of that online, and now whether or not it's a Klarna, if you will, that's kind of like the idea of at checkout you can borrow money. Exactly the same principle is available when buying a car, right? So that's one example of the kind of evolution as society becomes more digital. The financial services are available in the same setting, but there's dozens, right? So I used to work for American Express, fantastic company, huge corporate card provider. Love it, not got a bad thing to say about it. But how many people get corporate cards and then fill in expenses separately these days, right? You have businesses coming out, the Plios, the Soldos, these kind of companies, that it's all one package, right? You take your expense management software and your expense management card all from one provider. And again, we're working with companies like Finway in Germany who are doing exactly the same sort of thing. You have a financial operating system for a small business that is providing all of the financial services required for a company to be able to run its accounting, its expense management, its kind of overall treasury functions. So I guess the point I'm making is, I could take up all the time in the entire show, but I promise I won't. But all of the things that we've been doing, they're all becoming embedded finance solutions, right? Whether or not it's employee benefits, whether or not it's healthcare, we've talked about expense management, accounts payable, all these solutions that businesses use software to be able to manage these functions for them, ERP, project management, all of these kind of different softwares. You have to pay for things in them. And therefore, there are opportunities to put financial services inside of the software that run those solutions for businesses.
That's really interesting. Thank you, Daniel. David, how about you? What do you think on the opportunities of embedded finance?
I think from, just to elaborate on what Daniel was just talking about, the car purchase, right? So there's a lot around EV lending currently at the moment. So how do we encourage an individual to move to electric vehicle loan? And one of the things you can clearly do in regards to that with working with carbon data, understanding the performance of their existing vehicle, looking at the cost and carbon savings of a new vehicle, you can issue EV loans at point of need. And one of the challenges in the past has been that literacy piece. How do you educate and engage somebody that electric vehicle is better than a petrol or diesel vehicle? And I think combining non-financial and financial experiences, you can actually create a more seamless experience for an individual to understand the benefits that they're actually getting. Educate people at point of need, and then help them with that purchasing decision to take the friction away from that particular decision. There's a real trend at the moment around home energy retrofits, trying to look at green mortgages, green loans, even sort of green savings products for people at point of need. You're saving money here. Can you put it into a product? So, our thinking is, and what we're getting from banks at the moment, how do you blend that non-financial and financial experience to actually create better, meaningful outcomes for the customer? It's still a little disjointed currently at the moment. We'll probably talk about that a bit later, but still there's a real opportunity, I think, to help educate people at point of need and offer them financial products at point of need in a more integrated way than we're currently doing at the moment.
Fantastic stuff. And then, John, how about you? Do you have anything to add on this?
I think everything that Daniel and David have said, I agree with. I think the other things around how companies can kind of embed the sort of financial services and payments, say, into their loyalty programs. So that's obviously around how you increase customer retention and stickiness. I think that it also offers opportunities around how you personalize products more for customers in terms of how they might want to pay for things, or offering, for example, the buy now, pay later. I think everybody's probably seen that very much in action when they've sort of been online and buying things. And I think it also then, if you're sort of linking it into sort of like a wallet with a say a loyalty program, that also then looks at how you can encourage people to spend money in different ways. It doesn't have to just be via e-commerce, but you can then look at how you then, if you're also offering sort of point of sale type and face-to-face products, how you then sort of give the customer options around flexibility and convenience, in terms of paying for things, and at the same time, encouraging them to stay with your brand. So I think it can certainly form part of a brand and sort of branding sort of journey, and really trying to engage with your customers.
Yeah, absolutely. And I think I'd love to move on to, I guess, another big area when we think about things like this is the challenges involved. So you've all sort of spoken very briefly on certain different aspects of embedded finance and how it might be a little bit more challenging and different things that have come up. But I'd love to know, what are those main challenges that are, well, what are those main challenges that are causing perhaps issues in the uptake or in issues just in general overall? I mean, David, what do you think on this?
Thank you, Polly. I think from our point of view, what we're seeing is a couple of key things. One is the data, the underlying data that they're actually getting, and if that's for pre-qualification or data in regards to future improvement that they're actually getting. You're also getting one around literacy as well. So how do you engage someone? I've always been a firm believer is that, for someone to make a financial decision, at times there's the need that they'll just do it. There's other times they need to understand more about the commitment that they're actually making, and especially that's true for green, for green lending. So what's happening is for sort of green embedded lending is often it's disconnected. It's people don't understand the decision and the outcome of the decision, and unless you educate them first and you give them that underlying data, you're not going to get the outcome that you're actually looking for. So there's a lot of talk around hyper personalization, but often it's not as personalized as it should be, and sometimes you're then pushing offers to people that may not be qualified for the offer and may not be eligible for the offer. You're not thinking about some of the underlying data, which is starting to happen now in regards to how do you feed that data into credit and affordability calculations to make sure, and especially with green lending, where you can start to look at cost and carbon savings throughout the life of the loan. Are they factoring that into the affordability calculation, because their affordability may improve during the course of the loan depending on what they're actually getting? So I think the two key challenges for me are generally that literacy and data. I think data is still a massive one. That do we have enough data and evidence before making that decision?
That's really interesting. Thank you, David. And John, how about you? What do you think on the challenges?
I mean, I think Daniel mentioned earlier, regulation. So, clearly, you're effectively embedding what is typically a regulated product, so financial services, into a non sort of regulated product or service in lots of cases. So I think it's making sure that people fully understand what the regulatory requirements are, and that those are being adhered to. It's about given all of the data that's out there, particularly in payments, there's a huge amount of sort of individuals' data. So it's around privacy and ensuring that you're adhering to all the requirements around GDPR, but just general sort of security and data privacy. And I guess it's also about picking, if you're a brand, picking a partner who you want to provide that financial service it's about picking the right partner as well. So in terms of that they can provide the service that you need, that it's going to be reliable, that it's going to adhere to all of the regulatory requirements. Because ultimately, I mean, if a customer sees you as the provider of the service, you need to be sure that your partner is, that their service that they're providing to you is reliable and is going to, enhance your brand, not detract from it.
Yeah, absolutely. That's really interesting. And then Daniel, how about you? What do you think?
Well, first of all, I've got to say I'm really enjoying this conversation. David and John are singing my song, telling my story for me. So it's great that we're all kind of on the same sort of page. And I think I'll pick up the compliance aspect that John mentioned and maybe put a bit more colour and a couple of different perspectives on it, because, again, I fully agree with what John said. Picking a partner that can manage these things for you and knowing how much there is to manage is huge. But then and then what, right? Because staying up to date, I think, is a huge part. It's the regulatory environment is moving quickly, at least for a regulatory environment anyway, right? So there are continuously new changes, new things that you have to do. Hardly a month goes by that a Dear CEO letter doesn't drop and you have to respond to that, right? So staying on top of that as a digital business who isn't focused on being a regulated entity is of course going to be incredibly difficult. So you need a partner who's going to help you manage that, and not just manage it once, right? Because as well as on, it's also the localization aspect. So if you're going to operate online, as we're kind of all talking about, online doesn't have borders particularly easily, right? So you have to manage lots of different areas. You have customers in not just the UK, but also across Europe and internationally. So now you're operating in multiple different regulated regimes, or operating under different regulatory regimes. So what's different and what's accepted and what's normal in one place is going to be different to the next. So that's true, first of all, from a regulatory requirement point of view. It's then also true from a customer expectation point of view. So what's perfectly normal in one country in terms of data that you have to provide might not be what's expected in the second country. So now you have a kind of an orchestration issue of customer experience in different countries. And in order to, one size fits all really isn't the way that you're going to be able to make this work, not to provide the kind of experience that you want. And that moves on to the third part, which is the digital experience. And having made sure that you're compliant, having made sure that what's normal, you're providing what's normal and what's expected locally, you now have the added burden of, well, the simplicity of a digital journey, or the simplicity of the way that digital services work, doesn't always tie completely with the reality of a regulated regime. And things like single sign-on are a really good example. As individuals, we're used to signing in once via our Google or whatever it is that we're using, or being authenticated once, and then being able to be in session for hours at a time, right? That's not the way that a financial system works. The barrier to entry is far higher in terms of what's required from an authentication point of view, but also the amount of time at which you can be inactive without being logged out is far lower in a financial than in any other system, right? So think about, you open your online banking app, and then after a couple of minutes it tells you, you're going inactive, either click and stay on. Gmail doesn't do the same thing, right? So the digital experience that people expect, because they've got brilliant software that makes their life easier, has natural tension with regulated financial services. So it's a better product if the financial services inside of the digital service. It has, going back to that word of education, you have to understand that actually you can't just stay with an open session for hours like you were previously able to. Now you have to have additional prompts and authentication and security. So there's an education piece around why the financial elements of the service are different to the other parts of the software that you're using.
That's really interesting. Thank you so much, Daniel. And I guess I'd like to sort of move on from the challenges and kind of think about more of the benefits and kind of where embedded finance can actually really shine. And specifically, is this something that is going to benefit the consumers, or are we looking at more of a B2B kind of situation? I'd love to get your thoughts on that. John, we'll start with you.
I think both, to be honest. I think it has, certainly has benefits to consumers. I mean, if you say it's about convenience and streamlining a customer experience, the fact that you can log on to your the app that you use, or you're on an e-commerce site, and you can basically complete the transaction on there, or you can say, okay, I want to order my coffee and pay for it, and it's going to be ready when I kind of arrive in the coffee shop. I mean, that's obviously all about making it as simple and convenient and streamlined a process for customers, and also allows, I'd say, more sort of personalization as well. So, I'd say just generally consumers are looking for more personalization, and they want choice. So I think there are a lot of opportunities around meeting those expectations, and then I think that then has the benefit for businesses around retention, being able to offer customers choice, and potentially creates additional revenue streams as well for businesses. So whether that is a financial services partner where they are then providing a service into a non-financial services business, or where you're able to, as a non-financial services business, you're able to then capture the payment process as well, and effectively sort of create additional revenue from that aspect of the customer activity as well.
Brilliant, thank you, John. Daniel, what do you think on this one?
Again, similar to John, I'm going to say both. What I'll say though is, if you think about the experiences that we already have, a lot of the improvements in this space that have already happened have been in the consumer world. The Uber experiences, the Klarna experiences. These are things that we're very used to, and as consumers, we've become very spoiled by. It's now time for that to migrate into the business world, I would suggest, right? The opportunity to provide, I've talked about some expense management softwares already being in there. That's fantastic, but there's a lot more that we can go down that avenue. Again, accounts payable, employee benefits. These are areas that are ripe to provide the same sort of improved experiences to businesses that we already get as consumers. Now that helps us again as a consumer, because we're all people and we are consumers of these business softwares in our professional lives. And the business gets the benefits as well, the additional revenue that John mentioned, the reduced churn. But actually, there's a whole world of improvement in automation. There's a whole world of improvement in terms of productivity. There's a whole world in terms of improvement because of the kind of efficiency gains means lack of errors and these sort of things. So it's not just, can I get a slick digital experience? That's a huge part of it, and that's what we are maybe addicted to as individuals. But the businesses get so many advantages because now there's less opportunity for error. The automation has increased, so productivity is higher. The revenue stream, reduction in churn, the world that has started to be experienced by individuals will add all these benefits to the businesses as they start to take advantage of the softwares powered by embedded finance.
Brilliant, thank you, Daniel. And then David, what do you think on this?
I think we're all going to say something very similar in regards to this, but yeah, I agree. Both, it's one of the things that we talk a lot about is the intention action gap. With the rise of conscious consumers, they'll say, look, I love to do more, but I just don't know where to start. And the whole thing with embedded finance experiences, you can actually educate them at the point of need and make it easy for them to make decisions and align to more ethical choices that are aligned to their values. There was some research recently that said 75% if consumers want help from their provider to actually help them make more ethical decisions. So that's where the business can actually come in and educate them at the point of need and offer them options. And everything that Daniel and John has talked about, right? Lower their cost to serve from a business point of view, attract a new set of customers that they may not be attracting into their organization, increase their revenue, build loyalty and trust. So I think there's a number of interconnecting benefits that this actually brings, both for the customer and for the business if they get it right. All right. And there's a bit of work that needs to be done to get it right. But if they do, they have a great opportunity to create competitive advantage in the marketplace as well.
Amazing stuff. Thank you all for that. And of course, so as we're coming to the end of this webinar, obviously we need to cast our eye to the future and where, I guess, on two fronts, both where embedded finance is going in the future and where we might see embedded finance be in the next, 1, 2, 5, 10, however many years. But also, I think there's been a lot of talk, at least I've seen anyway, about how embedded finance is the future of finance, that finance is embedded, and that's kind of the be all and end all. And I'd love to know if you think that this is an accurate assessment, and if so, why? So, Daniel, I'll go with you for that one first.
I want to try and come up with something controversial and different, because we're all being far too nice and we're all agreeing too much. Look, maybe if I wanted to try and be mildly sort of provocative, I'd say the problem with the question is that it's not that it's the future, it's that it's already happening, right? We've kind of lived through these different financial evolutions in banking. You've gone from branch to online to mobile, etc. Right? So we've already sort of lived through that, if you will. And I think embedded finance is the next iteration of that. I tell a story that bores everyone that knows me about my son and I were watching I was watching football, right? My son was 4 at the time, 5 at the time, and he wanted to change TV. He wanted to watch, I don't know, Paw Patrol, Teletubbies, something like that. So he asked me if he could change TV, and I said no. So what does he do? He walks up to the TV and he goes like that, like wallops the TV, and I'm thinking, what the hell are you doing? And I'm getting angry at him. Then I realised what he's doing is he's swiping, because that's what he does with with an iPad screen. That's how he changes the screen on an iPad, right? The point that I'm making is not that I want to worry about the fact that my 5-year-old knew how an iPad worked. That's normal for him, right? And it's going to be normal to consume financial services inside of non-banking financial instances, if it isn't already, right? We talked about Klarna, we talked about Uber, Amazon would be another example. If you're a business, Shopify is a great example. That taking your financials, go into a bank and having a meeting with a bank manager is long gone, right? Now, what I will say is I don't think banks will disappear. This is a transformation, right? They become the kind of pools of liquidity and product provision and these sort of things in the background. The way in which people consume financial services, my son will almost certainly never have a bank account in the standard sense that we have all come to know it. So, my answer is not it's the future. My answer is it's already happening. And the question is only, will we ever be able to distinguish between an embedded finance product and a non-embedded finance product? I think that's a slightly more interesting question. My suspicion is yes, because there'll be niche products that aren't worth embedding, frankly, right? There'll be certain types of products that are so rare that they can't be easily provided through a non-financial setting because of the level of advice required, the level of thought putting into getting the service, maybe, right? But I think the majority of financial services will end up being consumed in an embedded fashion, and I think a significant minority already
Brilliant,
are.
thank you, Daniel. And then David, do you have anything to add on that one, on the future of finance and embedded finance?
Excellent. So I'm with Daniel in regards to that, and I've got a very similar story with my son destroying my TV in a very similar manner. But I just think that we're already here, I think, with embedded finance, and we have been for a little bit, right? It's just the evolution of where that goes, and that's why I think what we're seeing is that green and value led embedded finance decisions, that are more matching that hyper personalization piece that we've all been talking about. But we haven't talked about this at all. This is always a topic on nearly every webinar. The whole AI and Gen AI and where that's going. Blending non-financial data with financial data to create more hyper personalized experiences or better experiences, better for the risk decisioning. Better for product development. How is that evolution going to work moving forward? What we know from the work that we've been doing, that 71% of consumers want their bank to actually help them meet their sustainability requirements and help them live a more ethical life. If banks don't do that, then non traditional banking partners will do that and evolve faster. So there's a real trend in regards to blending financial and non-financial data. We can create better experiences, but also that ethical underlying nature of what we're actually providing what we're actually providing as well. And fingers crossed from a COGO perspective that the future is, more green, ethical, embedded finance opportunities at point of need, where the trend is really going towards at the moment.
Amazing stuff. Thank you, David. And then John, what do you think on all this?
I mean, I agree with everything that Daniel and David said. I mean, I think it's here. There's been a lot of I'd say development in the last few years. I mean, I think that's probably been more so in the B2C market. I think B2B is probably where there are some more opportunities. I mean, regulation is clearly going to be a key part of this. If regulators start to look at any of the, for example, by offering sort of buy now, pay later, is that creating any sort of issues with consumers or people getting into debt? So I think as long as that is done in the right way, and the approach is right in terms of only offering people essentially what they are able to afford. I think the other thing is it potentially opens up access to financial services for people who've traditionally not been very well served by traditional banks. So maybe in more sort of developing economies, it potentially then becomes a quicker way to give people access to financial services. And I mean, I don't know what the stat is, but I think the sort of access to mobile phones generally across all kind of countries is massive. So if you've got a mobile phone and you can access an app, then potentially it gives you access to financial services that people have probably traditionally not had or not been very well served by maybe sort of traditional banks and more traditional financial services providers.
Amazing. Well, unfortunately, that does bring us to the end of our webinar today. I'm sure we could all keep talking about this for hours and hours and hours. But firstly, thank you so much to our online audience for tuning in. If you want to hear more about the FinTech Power 50, please head on over to our website, www.thepower50.com. Or if you want to follow along the conversation from this webinar, head on over to X or Twitter, whatever you want to call it, and use the hashtag FP50 Embedded Finance. Then, of course, David, John, and Daniel, thank you so much for joining me today. It's been an absolute pleasure to have you here to talk about embedded finance and the industry that we're all in. So thank you so much for joining me, and hopefully we'll see you again soon.
Thanks, Polly.
Thank you. Thanks a lot,
Thank you, Polly. Thank you, everyone.
Thanks, everyone.